Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Hey everybody, what is up? Got a little camera issue. There we go. All right, sorry, I had a little bit of a funky issue getting started there today. But we're here, and I've got Thankfree on the backstage. He's going to join us very shortly, and we'll let you on in just a moment there, Thankfree. What we're going to do today is a special show. First, we're going to talk about the markets as we usually do. Then we're going to bring on Thankfree, and Thankfree is going to go ahead and work with me for a period of time, and we're going to take a look at his algo. He has been back testing, and he is going to forward test, and we're going to get into that. And this is a treat because what we do at Algo Factory is we help people learn how to build trading algos, which is just, a trading method. And then we help them refine it. And then they deploy it and they make their money and they go on their way. And so he is here with us. Like I said, he's in the backstage right now. We'll bring him on shortly. For the moment, though, it looks like Bitcoin is stabilizing. Now, we don't know how long that's going to last. Okay, so it might go up, it might go down. If I had to take a bet, I'd say that it would go down afterwards, right? But anytime you see price kind of forming one of these where it gets tighter and tighter and it forms a triangle, it'll break right out of this triangle, and this triangle might mean nothing in 2 days. But for the moment, that's what it's doing, right? And as long as it continues to do that, then that becomes more and more meaningful. And usually price kind of coils up. And when it does that, it breaks out pretty strong after that coil up. But again, it could just simply rupture out and you don't have this anymore. It just becomes a range. And, that can happen too. So these things are not, they're not gospel, these triangles. People do all kinds of crazy stuff with their drawings, and then they'll refit the drawing to fit whatever else. And I'm not really big on trading them, but there is an indication here that we could see price coiling up to make a bigger move. Now, this big candle right here is from yesterday's announcement for President Trump about the reserve. So the whole Bitcoin reserve, and a lot of people read that a certain way right here, right? And they also read it possibly because there's a stockpile and there's a reserve. And a lot of people read that they would not be buying any more altcoins. Well, they're not going to buy any more for the stockpile, but they may buy more for the reserve. So there's a little bit of tricky wording going on there, right? So don't get disappointed or anything like that. We could see more money flow in, more than what already has. And I'd be willing to bet that we will. However, for the moment, it looks like this was a sell the news event because that big red candle came out. Now, I'm going to tell you right now, this is a bit of an atypical red candle. And anytime I have seen these, believe it or not, it usually means price actually goes up afterwards. And it might be like a day or two afterwards. But a candle that has this odd kind of long body with these longer wicks, that's an abnormal candle. That's really kind of a whiplash candle. If I were to go, or whipsaw, if I were to go into a lower time frame, probably would just see the market acting pretty crazy around that candle. Yeah, that's a whipsaw for sure, right? Price stomped, got bought back up, and is heading back up. That's on the 1 minute time frame, by the way. So yeah, that's just what that is. So let me go ahead and take a look at the indices real quick, and we'll bring on Thankfree real quick after that, and we'll get into business here. Okay, so remember that Bitcoin and what it does is vastly affected right now, and to a degree, almost always vastly affected by traditional finance and the indices. So if the stock market is falling, Bitcoin tends to fall. I'd say Bitcoin's holding up pretty well considering what the stock market's been doing the last couple of days, because that's the SP 500. We had some tariff news at the beginning of the week that caused it to compress faster than what I thought, right? I thought it would go down, but it really, really stepped down. Same with the Dow. You see that. And then you got same with the NASDAQ. So these all really compressed a little more quickly than I thought they would. But either way, the charts were pointing it down. Okay, so gold, on the other hand, is looking great, and that's pretty typical when you have a lot of international instability, which we do with the Ukraine situation, because that affects everything. And then there's Israel and Syria, and there's everything else. So that's seeing gold pop up like that is not a very big surprise. And I was looking for that 3,000 gold maybe in quarter two. We might get it in quarter one. We almost got it. We were at 29.60, 29.55 going back to February. So, just keep an eye out for that. And instead of going through all the charts though, right now we are going to bring Think Free on. He's been patiently waiting backstage. So let's go ahead and do that. Think Free, how are you, sir? Oh, you're muted. Think Free, you got to unmute yourself. Okay, Think Free is going to figure that out. In the meantime, what I'll probably do is get some more charts up here until Think Free figures out. He might not be.
I got it. I got it.
Okay, how are you?
I'm good, thank you. It's a good day.
Good. Say again?
It's a good day. I just tried to grab something to eat.
That's good. Yeah. So because I think you're on. I know where you are. So you're. This is pretty early for you.
Yeah, it's like 5:38 a.m.
Yeah, well, at the moment I'm on the same time zone as you. I'm pretty far away, but yeah, I've been here I had a family issue to handle here. I've been here for a few months. We'll be back home very soon. I'll be back home within a week though. So it's supposed to be back home already, but just had some interruptions, if you will.
Yeah.
So, but we're just looking at charts here, doing our thing like we usually do.
Yeah.
And things, it's Friday. You tend not to get a whole lot of excitement on a Friday. You'll get like a Friday take back, or you'll get, Friday maybe reversing some of the things the price has done during the week, or things calm down halfway to the end of the day. I usually don't trade much aside from scalps on a Friday. So, just kind of looking at the market, and it's doing the same thing it's been doing all week. So I don't know that we really need to spend a whole lot of time on the charts or anything. And of course, today is the treat. Today we have you here, and you're going to go ahead and work with me on your algo. So just so we understand for the audience here, and as I said at the beginning of the show, we help traders build a trading method, and that's called an algorithm. Now, a lot of people hear the term algorithm, they think it's like auto trader, like a bot.
Right.
And while you can do that, and while I have done that, what we're doing is building the basis of the trading method before somebody goes and codes it. And you don't have to code it. It's not necessary to code it at all. In fact, I know my coder prefers to trade manually, believe it or not. The guy that I work with to code my algorithms, he prefers to use my algos manually. Yep. So, coding and auto trading and all that, it's not what it's cracked up to be. There's actually a fair amount of human involvement. You got to know when to turn it on, when to turn it off. You got to test it a lot before you can run it. And when you're running something automatically, and especially in the Trump era, you have a lot of surprises. You have the market doing things that you don't expect. And so when you have an algo running, algos are tested and based on a certain kind of market condition. And so when the conditions change very quickly, that can actually get you into trouble. And so if you're manually trading, then of course you only have the trades on that you put on, and you can go and you can deal with that. You can adjust the trade, manage the trade, exit the trade, whatever that might be, and minimize your losses. But if you're auto trading overnight while you're asleep, and something happens in the middle of the night, and you might enter a bunch of trades and lose a bunch of trades, and so that's the downside to auto trading. So long story short, I have your chart. So let me see if I can bring that up here.
Keep the drawings on it.
Okay. So I got to recapture my screen here because let me do this here. Window.
And
this should be it here.
If you could, just for the fun of it, go to that's where is it at around December 18th? No.
I've got December 18th on the dotted line right there.
Yeah, that's good. That can give you an idea of some of the test trades I've done on the 15-minute, or pardon me, on the 3-hour.
Have you not? Okay, so what you want to do with this to help yourself out is you want to link your. Let me copy this. Actually, I should have copied this and saved it. So let's do Think Free, so I can manipulate this for you. So I'll show you a couple tricks to make your experience a little easier. The first thing you want to do is you want to sync up your drawings when it comes to time. Like you'll notice on my chart, I don't know, maybe you've already done this, maybe because I was looking at a copy.
Oh yeah, yeah. No, mine. I think I've synced it up with time pretty
Okay.
well. Yeah,
I think it's because I was looking at your copy. That's
yeah,
why. So here's December 18th right there. You got some test trades.
yeah.
Okay, so
And
let me
I
think.
think they go back in time from there, but
Okay, you got a triple SMI. Let me take a look here. So you got a
yeah,
triple SMI, and you got a 12-hour.
yeah.
You got a. There's no time frame on
Oh,
this one. It must
no,
be the
that's a 2 day, or yeah, 2 day.
2 day.
And,
Okay, because it's
uh,
interesting that it's not showing a time
it
frame
didn't,
on here.
that's interesting. It maybe didn't copy it.
1 day, 3 days. So 2 days is how many hours or how many minutes? Because it doesn't give an option for 2 days. So you're gonna
two
have to
days
do.
is the first one is 12 hours. The second one is 2 days. Yeah, it's accurate on my own chart, and the final one is 1 week.
Well, hopefully it stays accurate because I don't have a 2 day option on mine.
Weird,
Here.
weird.
No, okay, you misunderstood me. So I see that the last one's 2 days on the far right. The pain is 2 days. When I look on the far left and I open up your SMIs
Yeah,
and I look in the settings of your first SMI, it's a 12-hour SMI.
yeah.
I look at the setting on your second SMI and there's no time on it, no
Yeah.
time frame.
Wow, that's weird. It's 2 days on mine, but
The second SMI on the far left on the middle here.
yeah, yeah.
Okay, so I don't have a 2 day option. So I don't know how
Wow,
you did that.
wow, weird.
You see here 3 days, 1 days. Maybe if I just type in 2 days. Yeah, there's no 2 day option for me.
Wow, wow. That's weird because there is for me on mine, and I sent the same chart to you. But so it's
That's
a
weird.
glitch. It's probably a glitch with something.
What are you on PC or are you on Apple?
I'm on PC.
Are you using the downloaded version?
Oh, now that might be it. No, I don't think. I think
Are you web
I'm,
based?
I'm web based. Yeah.
Well, so am I, so it shouldn't matter.
Oh,
Um,
and then the
well,
last.
so here's what you do: you take 2 days, and then you multiply 48 by 60,
It's
and you get the hours.
okay. You can just do that.
Yeah, that's what's going to
It's
happen.
12
So let
hours,
me get out.
2 day, and 1 week.
So we got 48 times 60. Clear that out. 2880 minutes. Let's see if I can change that here. It might be that it actually stayed where it needs to be.
Yeah, that
Okay, the best I can get is 648 minutes. That's really odd. We'll see how it goes. And then because it's on there, it's where it needs to be.
Yeah, yeah.
And the last one's 1 week. Okay, so you got your triple SMI, and okay, that's good. So I'm seeing EMA stack. Let's see, you got your moving average ribbon.
Yep.
And you got your ATR trailing stop. Okay, that's good. So walk me through it. Where do you look first? Do you look on your center pane for your
on the far right first to assess the to look for trends essentially.
Is it above, below EMA?
Yeah, and that's an 80. I've been using an 80 EMA as a guide. If it's above, it's bullish, and below is bearish. But that changes if it becomes a consolidation. But
okay, so is this a trend algo?
Yeah.
Okay, so we don't worry. You're not trading in a consolidation. You're only trading in a trend.
Yeah.
Okay.
I'm trying to avoid that. Yeah.
That's good. Yeah. So you see here on the 18th, I see that you've traded, and if you look on the far right here, it looks like your drawings are not synced up. I've had some issues with that with the trading view. It might be just my own system, but the drawings will not sync up for some reason.
Oh wow! Okay.
All the time they won't. So what did you say? December 18th, is it?
Yeah.
Okay, so I'll just put a line right there.
Yeah. Okay.
And we'll cancel that. Okay, so we know it's on the big candle. So that being the case.
So what anyway? Yeah, so I look for I'm looking for trends, and here I've got it written out even.
You send me the document here.
Trend. So yeah, I'm looking for on the right hand to try and identify trend, and then on the 12-hour, chart, the middle one, I want to look for an EMA cross.
And I see it here. EMA ribbon set at 12 and 25 3-hour. Okay, you got the settings. Track trend on 2-day. Look for EMA cross on a 12-hour chart. So in this case, if you're bullish, if you're in a bullish trend over here, and you're looking for an EMA cross, this is an EMA ribbon. Let me see the settings on the ribbon real quick. It's just 2 EMAs. Okay, so you're not
13 and 25, yeah.
So you have an EMA cross right here.
Yeah, right, and then so when I look at I look for the cross on the middle one, the middle chart, and then I'll go to the 3-hour chart on the left, and then look for an entry. And I've been basically testing it out primarily with the EMA ribbon, and I've been recording where the SMI is.
Okay, so you're not really using the SMIs in this case.
I haven't been using it a lot because.
Okay, let's take it off the screen.
Yeah.
Okay, so get across right here. So you got that, and then okay. So one thing you might consider to squeeze a little more juice out of the orange here, is that if you'll notice, as soon as you got that cross on the center pane, that would have been a nice entry.
That would have been a good one.
Yeah, so it might be, but it might not work like that every time.
Yeah.
You know, so it's not necessarily. It's just something to look at, right?
Yeah.
For example, you start to get an uptrend here.
Yeah.
And this is uptrend here. Yeah. So like here, for example, this looks like an uptrend, but it looks like you short. Okay. Yeah. Well, I get it. You don't know until you know, right?
Yeah.
So up here. Yeah, I'd almost say like it helps to, the above EMA, below EMA thing is going to be a little bit of a problem because your EMA is so flat.
Yeah.
I would use a tighter EMA on that top. So you're using an 80.
Yeah.
I would consider a 50.
Oh, down. Okay.
Yeah, because here let me show you why.
Yeah.
So it's a good strong impulse, but for example, right here you're missing out.
Yeah.
It takes some time to turn around.
Yeah.
And then by the time that, like for example, right here, you're in a downtrend, but you're still above your EMA.
Yeah.
But you're going to get that though. So it might be that the 80 is good. It's tough.
Yeah.
You have to kind of find out where your happy medium is because when you have this 80 EMA down here, let me make this a little thicker for the audience to see.
Mm-hmm.
Let me see here, style. We're going to go like this and we'll make it brighter. So this line here, you're in an uptrend. Mm-hmm. And of course, let's go ahead and cordon this off from here to here.
Mm-hmm.
And then I'm going to go ahead and, because it might be the way that you have it is optimized. I don't want to, I don't want to make a call before I've really gone over everything. But you'll have, what I'm curious to know is here, and about here. I want to see how the EMAs behave in the middle, because with these algos, it's never going to be where you catch them all. So the 80 might be ideal.
Okay.
In that case, so let's do this because we know we're in an uptrend, but then we have kind of a flip here on the testing. So let's see how the center time frame EMAs behave. Okay, so here, it's going to take you out of it here. That's not bad, actually.
I kind of eyeballed it by studying it a bit, but
no, this is all right. So what happens here is that on the far right, just for the audience to understand, we're using this EMA as like a trend teller, right? Mm-hmm. So if price goes above this white line, that's an 80 EMA.
Yeah.
And if it goes above that, and I'm Dan, I know you know this thing for you. This is for the audience here. So as price is above here, it's going to be likely in an uptrend, right? Now you get these moments where it pulls back. And so the way that Thinkfree has designed this is that this is the 2-day time frame on the far right. In the center, we're looking at a 12-hour if memory serves. Yeah. So now Thinkfree's got this this EMA cross right here to the downside. And V is here. V the Guerilla, how are you, sir? V, you're muted.
Oh yes, Brokashin.
Sorry, you were. I got concentrated on
Okay,
this.
man. I walked away. I made myself a snack and brewed some coffee. Came back and I'm still waiting in the back.
That was like 10 minutes, bro. Sorry about
The
that.
worst.
Working with Thinkfree here, and I got
Hey,
into
Thinkfree, how are you, buddy?
Good to hear your voice again.
Same.
So
Good to have you back.
Good.
I gotta have V's voice in my ear at least like once a day.
Well, you have
So
recordings of me as you sleep.
Yeah.
That you listen
Yeah.
to. Yeah.
that's it.
Bedtime.
Shoot.
That's it.
Little you make those AMSR videos, don't you?
Yeah, I do. But it's just me talking and rambling.
Well, it's perfect.
I'm
That's what it's all about.
ranting. That's what it is.
Yeah, I got into algo building mode and totally just like, oh shoot, I didn't look at the clock and look at the screen and all this. I didn't even have my the chat open.
Yeah.
Oh, I didn't even what we'll do is anybody can see it on YouTube. We'll keep it like this, but I'm gonna go ahead and open it up in the private live lab too, so people can watch it over there if that's okay. I think there are some people who, for whatever reason, they don't watch it on YouTube and they just go straight to the private live lab. So I got a little too heavy into the algo building and didn't flip over. But I didn't plan to flip over completely, but I could have at least opened that up. So let's take care of that. There we go. All right, good. So the live lab should be good. All right. Okay, yeah. Coop says you should be able to custom add it the 2 days. So let's see if we can figure that out real quick. Thank you, Mikey, for the 5x5.
Yeah.
So let's go ahead and do a quick trading view bit here. Not that we're really using this, but can you custom add an input here? Question mark. Okay, let's not go there. Don't see it. Not to say you can't do it, but looks like Coop knows how to add on your 2-day for that. Look, I think you've already got it on there. We're not really using it, so back to the chart. So like we said, we'll if price is above the 80 EMA on the far right on the 2-day, right, then we're only taking longs. And high time frame, usually that means it's a bullish trend, right? So I just kind of put these lines here to cordon off like a nice testing area where we know this is going to be long. And you'll see these little kind of grayish lines that I put there. Those are just to see how reactive your EMAs are. And what you can do in the whole testing environment, I mean, this is pretty good. You might not change anything, but you could experiment with some tighter EMAs on here. Because you already have your trend pretty well set. Instead of a 12 and a 25, you could do like an 8 and a 15.
Oh, okay. Spread them out.
You see. Well, what it'll do is, so if I go back to 8 and 25, I'm sorry, to what do we have here before? What are your EMAs again?
12 and 25.
12 and 25. Okay. So you go to 12 and 25. What you'll notice here is that, okay, we're supposed to be, in an uptrend, but then this is going to take you away from that trade right there.
Right.
Now, let me make this more visible. Make this red's good, I guess. No, we don't like red. We use yellow. It's fine. Like this, and then you'll be back in the trade right here. Yeah. So that's good. That means you're not taking any, but there's a fair amount of time here where you're still technically able to enter your trade. Yeah. And price is headed down. So when you crunch these a little bit and you put this like in an 8 and a 15, what that's going to do is it's going to move back
Oh,
your
okay.
thing here. So now your
Ah,
price has already turned on you, but now you're getting out of those trades sooner. You're not taking
okay.
longs when you shouldn't take longs sooner,
Right
and
on.
even getting back into your shorts a little bit sooner as well.
Yeah. Yeah.
Now, doing this too much can be a problem too, because what you'll notice is that on the way up, you see how your EMAs kind of they
Mhm.
don't touch here, but if you get it too tight, they'll start to touch, and then they'll not really be that useful. So
Mhm.
you can experiment with, like, say, even a 5 and a 10,
Mhm.
and see if that if that's a little too squirrely, or if it's
Mm.
still pretty good. See, like here, it's a little squirrely. You see the 5
Right.
and the 10 touch each other on the way up. So I'd almost say don't do that. Not
Yeah.
almost. Kind of like where 8 and 15 was, to be honest.
Yep.
Just to do that. So that's something I'd consider testing. Is
Yep.
tightening up your what is this 12-hour EMAs like that.
Yep.
So that's just one way to go about it.
Yeah. Yeah.
Let's see how it behaves on this area right here. So we'll go back to you said 12 and 25.
Yep. 12.25.
Okay, so this is your original EMAs.
Yeah.
So you have exit here and entry
Yeah.
there, right? Not exit and entry, but
Yep.
trade on, trade off. So then what we'll do here is we'll change it back to 8 and 15.
Mhm.
What you'll notice is that you'll be stopping the longs a little bit better and starting the
Mhm.
longs a little bit better. It's just going to give you a
Yeah.
few more. And this is on the 12-hour. Like you're
Yeah. Yeah.
giving yourself a whole day by doing
Yep.
this.
Yep.
It's an entire day of either not getting into bad trades or not missing good trades. So
Okay.
I'd probably tighten that up a little bit. Um, so we have that. We have all the understanding now, right? So let's go to the. So you're using. Let me look at your notes here. Okay, so look
Um,
for EMA cross on the 12-hour chart, and then let's see. Enter long short 3-hour if 12-hour and 2-day SMI can grow with long short.
yeah, that's kind of, I've been adding that later. Like
Okay,
I saw your video steal my algorithm a few weeks ago,
nice.
and you did the three. You were doing the same thing, but because I don't, what I've been doing is just setting my testing at uh, like a 1 to 2 ratio, and
Okay,
then just letting it play out, like not having an exit, just letting the letting the chart play out, either a
yeah.
winner.
Let the stop loss take your stop loss or take profits. Letting the order cancel order do its job.
Yep. And but it'd be nice to. I want to eventually. I've got numerous questions like about just doing trading, because what happened was I've been doing lots of back testing over the past while. I've been but I when I went to forward testing, I just fell off the wagon. I got like gun shy. Like I did a series of trades. I didn't of test trades, forward testing, and I got a lot of losses. And so I'm all freaked out because it's very different actually live trading from back testing.
Yes, it is.
And so it's about the way to manage time. Like I don't have a lot of time, and so therefore I went to a swing. This is like a swing trade algo testing, what I'm
Yes.
doing here, and so I don't understand how to do it on a practical way where I open up a chart, say at the same time every day. Let's say every 9 a.m. every morning, I open up the charts and I check to see can I enter a trade or not, and then tracking the trade. I mean, then I was so yeah, I'd done a bunch of test trades and just let them run, and there were a bunch of losses, but I wasn't strictly adhering to my algo, because my big temptation was on a given trade was to say, well, gee, maybe I'll make
Now,
it.
hold on a minute. What? Wait. Repeat that sentence and say the first 5 words.
Um,
I
I'm
didn't strictly adhere to my
doing
algo.
yes, that's right.
Okay, what do I teach you to do?
Strictly adhere to the algo.
Right.
And I
Okay,
noticed
so
that it seemed
yeah, so
logical not to, because if let's say I would normally set a a ratio of 1 to 2, and then I set a ratio of 1 to 1.5, that would be better odds of winning, right? You get what I'm saying?
Well, no, not necessarily. So if you, so here's the thing about it. Let's talk about a couple things. First of all, you have an entire method that you've tested. You've gone back and you stuck with a 1 to 2, right?
Yep. And
So 2 to
yeah.
1 risk. And let's help the audience understand what that means. So let's take a break.
Yeah.
And what we're going to do is a 2 to 1 risk to reward ratio means that you're going to double your money. You're actually going to triple your money technically. Yeah. So if you have a 2 to 1, that means that your trade's going to look like this, right? Yeah. Price is heading up.
Yeah.
And you enter the trade, right? Yeah. And we'll say that you enter the trade like right here.
Mm-hmm.
Whatever it might be.
Yeah.
So price enters right. Let me grab my arrow here. Price enters right here and exits right here.
Mm-hmm.
And I know you know this thing for you. This is for the audience watching.
Okay.
So that means that if price were to have gone the other way against you, if price had gone down and exited down here, you lose, let's just say $1,000. Or I think for most people, it's probably more like $100 for the new traders. So let's say you lose $100. But if price goes all the way up here, you've made $200.
Yeah.
That's a 2 to 1 risk to reward ratio. And that's how we do things when you trade like, a real person, not this, buying meme coins and all that. I mean, real trading, like a professional. Yeah. So you set your risk to reward ratio. If you lose your $100, right? Yep. And if you win 200. That's a 2 to 1. Yeah. So the thing about this, and the reason that, people, what they'll do is, what if I go 5 to 1? Right? That's kind of a natural thing to think about. Like you have your 2 to 1 and you got your 5 to 1. All right. So let's take a look at that. This is a 2 to 1 right here.
Mm-hmm.
All right. This is a 5 to 1 with the same risk.
Yeah. Right.
It's like, oh man, okay. So I could put in $100 and I can make 500, right? Because that's how people think. But here's the problem with that. You didn't test based on a 5 to 1. You test based on a 2 to 1.
Yeah.
Okay. And the way that charts and everything works is that the longer a trade goes, the more likely it's going to go against you.
Yeah.
Okay. So because you're trend trading. So let's do this example right here.
Yeah.
Here's your 2 to 1.
Yeah.
Right. That's realistic. And with most trading, 2 to 1 is pretty realistic. 3 to 1 starts to get a little less realistic. But let's do your 5 to 1, right? And the same exact entry and the same exact risk. Here's a 5 to 1.
Yeah, yeah. But
you see the problem. Hold on a minute. Think free. So watch this. Did you win that trade? Here's your 2 to 1, right? So let's take this away. Here's your 2 to 1. Price goes up. You take profit, right? Now you have the exact same risk. So let's just mark this. Let's make it easier to see on the screen. Here's your 2 to 1 take profit. Here's your 2 to 1 stop loss. Right? So your 2 to 1 price goes up. You take profit. Beautiful, right? Well, look at your 5 to 1. You lose the trade.
Yep.
So when you test based on a 2 to 1, you're testing on something that's much more likely to win. Having a 5 to 1 in trading is extremely rare. The only time you're going to catch that is on major reversals or major trends, right? And then there's other ways to talk about that. But long story short, what you got to do is that if you've tested on a 2 to 1, what probably happened on that is that as you were testing and going through your methodology, like you do, right? You're going back through the charts, you're taking a look at this and that and the other. You're looking at your entries, your exits, the way the charts move, and you figured out the 2 to 1 is pretty optimal for you, right?
Yeah.
So why would you change that?
Yeah. Well, the way I think is the opposite, though. I think I'll put in a trade, and then I'll think, well, my odds of winning are going to be higher if I lower it to 1.5 to 1, or if I
but you win less money that way.
Yeah, I know, but I just that's what I was doing. I was going the opposite. I was becoming more conservative. And I wasn't strictly adhering to my algo. And
You
but
got to strictly adhere.
my algo, I put the trade up the 2-to-1, and I just let it run. Whatever happens, right? Until price either hits profit or hits the stop loss, right?
Hmm.
And so you're saying I should do that. It's just the temptation when you're looking at the chart to try and adjust it, I guess.
No, this is what we teach. We teach don't do that.
Don't do that.
That's one of the
Yeah.
that's one of the most basic things there is that
Yeah.
you don't know the future.
No. So I guess
You know how to,
I guess that reduces this. I don't have to keep track of the trade then. I can
no,
just
you don't want to. This is the whole, because I've known you for going on a year and a half, 2 years now,
Yeah.
and I understand your schedule, and this is
Yeah.
one of the reasons I'm interested in seeing you succeed, because you only have a few hours a week.
Yep.
Right. And you're not always doing this. You might take a few months off, whatever it is. But, if you stick with this,
Yeah.
with your schedule, you cannot afford
No.
to track the trade.
Right.
So
Right.
you shouldn't be tracking the trade.
This is even better. Yeah. Yeah. Yeah.
Yeah. So what that means is that when you're testing,
Yep.
if you're not going to, and you shouldn't be managing the trade anyway. If you're going to manage the trade, if you're going to track the trade, then your entries and exit reasons have to always be the same, and they have to be based on the chart, and they have to be based on whatever you're using, price action indicators. So managing a trade is something that that's got to be algorithmic as well.
Yeah.
And I don't think that for somebody who doesn't have more than maybe a few hours a day at the most.
Yeah.
Look, the way that swing traders trade is that they go on a Sunday and they look at the for Forex traders, which that's
that's what I want to do. Yeah.
Yeah. That's I think the most ideal. You can take a small amount of money and turn it into something on Forex. You can't really do that too many other places. So for Forex traders, you're going to, like, on a Sunday, you're going to take a look for 30 minutes to an hour, and you're going to look at all the trades you see coming for swing traders. Right? And for someone with not that much time, it's all about the swing trade.
Yep.
And so you're going to look on there, you're going to kind of plan out your week. You're going to say, okay, I think I have some opportunities here. Right.
Yeah.
And then on I don't like trading Mondays for swing. I'd rather trade a Tuesday for swing. But I mean, you can, if a swing comes up, I'd let the Monday morning jitters kind of complete before I entered any swing trades. Long story short, let's just say your trade forms up on a Tuesday, and your entry looks like it's going to happen, right? So you set your entry, and then you let the market come to you. So let's just say that you're kind of doing what is called an ICT type trade. So let me. And there's people who know what this means, and it's really just something that all of us have done for years, and they just gave a new name to it. But let's simulate how this works, right? So you're looking at the charts, that price is in an uptrend, and then you're just kind of watching it, right? And then you see that price makes a bit of a move down. You're like, okay, we have a dip here, but we're seeing an uptrend. So price is probably going to do something and then come back and grab that consolidation and head up. That's how it always does that, right? It grabs the liquidity. So what you can do is, as the day, let's do this here, 10x. So as the chart wears on, right, and you see how price does that, and then you look for a breakout of some kind out of your consolidation, and we know it's going to happen because we know the future. So this is kind of not fair in a way. So now what you're doing is it's Sunday or whatever, and you see that there's a breakout, and price is going to come back and grab. This is just an old price action style. I'm just doing this so you can understand how swing traders do their thing. So you want to enter at the top, or at least somewhere in this consolidation. So what they'll do is they're pretty sure price is going to head down to that, right? As a matter of fact, they'll keep watching and they'll see price start to arc down. And then what they'll do is, before that happens, what they're going to do is have their entry ready to go. So it's the morning time, and it's another few hours to go. So they'll put their entry here, and they'll have everything kind of just ready, and then they'll go about their day.
Right.
And then price will come to them. Bam, they're in the trade. See.
Yeah, I like that.
Yeah, that's ideal. Now, because you're in an algo situation, fortunately, as a swing trader, what you can do is you'll set an alarm. Now, you're not price action, so this kind of doesn't work for you in a way.
Mhm.
But even with your own method,
Mhm.
you're looking for a lower time frame EMA cross, if memory serves, right?
Mhm.
So if
I'm
you go
I'm looking for the EMA cross on the middle chart,
on the middle chart, okay.
and then after the cross, I look for an entry on the 3-hour. I don't know if that's the best way to do it. And then I
No,
also,
I think it is because you're. We talked about that earlier,
yeah,
so I think you're okay on that.
and then if it is a go, like it's a go, then is it called pyramiding, where once you enter one, if it looks good, I wait for the what's the trailing
I think
stop? The trailing stop. I wait for the trailing stop to go to entry, and then I'll do another trade if I'm in a definitive uptrend. Like that's a good example. No, that's not a good example. But I look for I want to do up to pyramid up to three trades in a row once I'm in a solid uptrend. And
what I would do with that pyramiding is I would just treat it like a separate trade every time you pyramid in. So I wouldn't.
No, I don't do. Yeah. Once I don't know what the proper use of the term is, but once the trailing stop loss goes up to entry, then I'll put in another trade.
Yeah, no, that's okay. So pyramiding is how many trades you can have at a time. So, and I believe there's a little more to that, but
Yeah.
I don't. I just those are some terms I use, some terms I don't. But
Yeah.
If the trailing stop to entry, if that is a way for you, if you like that, there might be that's kind of an interesting idea.
Yeah.
It's an interesting idea. The only thing about it is that what you're doing is you're building a position. So, here it seems like that's what you've done here.
Yeah.
Right.
Yeah. Yep.
I'd almost rather, instead of having it be trailing stop to entry be the reason to enter a trade, I'd rather just use the same entry logic.
Okay.
Because look here, if these are your second entries here on the 3-hour, second and third entries and fourth, and you're pyramiding up, well, you're entering on these here. But if you were to just follow the same entry logic as the first trade, then you would have entered sooner.
Yeah.
And you would have entered sooner. And you would have entered sooner.
Are you on the 5
the 3-hour?
Yeah. No. Are you on the EMA with the 8 and 15 or?
This is the 12 and 25 on the 3-hour.
Okay. That's the one I was using.
Yep, that's on the 3-hour. So your stop to entries is putting you in the trade farther out.
Okay.
So I would use this.
Oh, we use the cross on the 3-hour.
Yep. I'm doing it. Yeah. So I'd use the EMA cross.
Sense. Yep.
Because the sooner you get into a trade, the better, right?
Yeah.
So I would probably, because that's anytime you're doing this, if you're using some kind of entry logic, but you find that there's an entry logic that gets you in sooner, then you might want to consider rotating, flipping over to that.
Yep.
Because you got 1, 2, 3 pyramids right here.
That makes way more sense. Yeah.
But you got to test that. I mean, it looks good here on this little tiny sample, But this is a little tiny sample. This isn't 200 times.
Yeah.
But you might want to, consider what I would do with that. Again, I would consider just using the same entry logic over and over rather than the stop loss method.
Okay. What do you mean rather than this?
Rather than having your trailing stop come to entry and then you enter a new trade?
Yeah. Do it with the cross.
I would just use the cross.
Yep.
Because that's getting you in way sooner. You got 1, 2, 3 pyramids here.
Yep. No, that sounds really good. So actually things are getting easier now. This is actually an easy method because if I don't have to track the trades and it actually works, if I tested it 2-to-1. I also did on my Excel sheet, I also did 1-to-1, but I compared 1-to-1 to 2-to-1, and there's virtually no difference. It like the idea was that I would do a 1-to-1 trade and a 1-to-2 trade at the same time, but very rarely I would win just the 1-to-1 and not the 2-to-1. Usually the 2-to-1 was better. I mean,
yeah. So this is the process of optimization.
Yeah.
So you're going to find the optimal risk to reward for your algo. And eventually, like what you want to do is get like you're doing is good. You don't want to test too many different things at once because it just takes a long time. But at least you've got like a 2-to-1. You know that the hit rate is basically the same as a 1-to-1, right? So you're just making half the money going to 1-to-1.
Yeah, exactly.
So here's a question for you. So you knew that on the spreadsheet, and yet while you were live testing, you chose to cut down, knowing that a 1-to-1 is as good as a 2-to-1, and yet you chose to cut down towards 1-to-1 on your live testing. So that's not that's the opposite. I mean, my friend, that's the opposite of logical.
Yeah. Absolutely.
You have the data saying that you don't do that, and that's literally what you did in live testing.
Yeah.
So this is the.
I didn't have that data actually when I was doing the live testing, but anyway, that's fine.
Okay.
But it makes sense.
So now now after the fact.
And I wanted to ask a question about the SMIs then, because I on my Excel sheet I track the SMI pretty intensely. So is it, and I was wondering about developing a rule of if two, let's say I'm making a long, it's a bull market, and 2 of the 3 SMIs are in a bull, then is that a good sign? Or is 3 of them are in a bull, then that's a good sign?
Well, yeah, it's always going to be a good sign, but there's a couple of problems there.
Yeah.
You don't want to get too caught up in the minutia. And one of the issues with the SMIs is that you get these periods like you can see on the screen right here.
Yeah.
Right. You can kind of see that. Now there's the whole thing about this is that if you have something that's profitable and you're not trading yet, then just deploy it.
Yeah.
Right. You start putting too many pieces in, and what you're going to do is you're going to complicate matters. And that's not necessarily a problem. But if you're not making any money yet, don't worry about that. If you have something that's simple and profitable, deploy it.
So you're saying that even a simple EMA cross method like this with a multi-chart might be all I need, not the SMI at all.
Well, let me put it to you this way. So if you've back tested everything with the EMI flips, right?
Yeah.
If you start adding in your SMIs during the beginning of the back test, there's going to be a disadvantage and an advantage.
Right.
The disadvantage is going to be like you're just going to have a lot more time spent, right?
Yeah.
And you're going to be back testing multiple methods at once.
Yeah.
So it just becomes a bit cumbersome. But if you're up to the task, that's fine. But here's the question: are you making any money?
Yeah.
So if you're taking, I don't know, if you're taking like 4 months to back test something, and for you, time is extremely valuable, right? So I would consider it, just knowing your situation and having back tested a fair amount in my life, I would get something simple and profitable.
Yeah, and just do it.
And then once you're up and running with something that it's got to be profitable enough, like if you're making 0.5% a month, I mean, that's for, 0.5% a month is great in the real world. People like 6% a year, but you're a Forex trader. You want to do better than that. So I would choose a target, whether it be, 2% a month or what it might be. And then I would make sure that whatever my back test was like maybe better than that, like 3% a month. Because when you go to live trading, it's gonna take it's not gonna be as good as back testing.
Yeah.
So I try to hit 3-4% a month if that's what your target is, or 10, whatever your target is. As a swing trader, I think like a few percent a month is pretty realistic. And then you test it, live test it, and deploy.
Yeah.
Because a live test on a swing trade, remember, you're only testing one thing at a time. So you're only going to be doing USD JPY on the 3 hour, and you got to back test that whole thing, and it's only USD JPY.
Okay.
Right. So you can't just you can't back test USD JPY, USD CAD, EUR USD, and you can't do those each 33 times. and say, hey, I've got 100 backtest. No, it's got to be 200 backtest on USD JPY, and you're only trading USD JPY.
Right. Okay.
Right. So it's one backtest per currency pair or per asset, whether it's Bitcoin or anything else. The one backtest per asset per time frame. So I would backtest if you like USD JPY.
Yeah, I do.
Then I would backtest that because it's nice and trendy at this time. I would just test that, and then I would forward test that. Now, as you're forward testing, technically you're deployed because you're actually testing with small money, right? Like money you're not afraid to lose. It could be toy money, like $10 a trade or something, right? And then with a swing trade, USD JPY, you're going to be looking at a trade or two a week, maybe. So it's going to take you a long time to get to 100. So you're going to have to ramp it up maybe a little differently. What you might do is you start out with toy money, and then as you start to become a little bit more profitable, you hike it up a little bit, like not a lot. By the time you're to 20 or 30 trades, you might want to be at least at a quarter position size, right?
Okay.
So that's something you're going to have to look at your budget and your time, and you're going to have to look at your back test to see how often you're in the trades. If you're pyramiding, fortunately, that's going to put you in a few more trades. It's going to give you a little bit more,
then I'll be,
you'll be in 3. Yeah. So you could end up in a few more trades a week, and your forward testing could go a lot more quickly than somebody who doesn't pyramid. And that's good news. So I would pyramid 2 or 3 minimum though, maximum 2 or 3.
Yeah.
So that's for those of you watching, that means 2 to 3 trades at the same time open. Right. And I would just use the EMA crosses on because what you're doing, obviously we've established that the EMA crosses are going to get you in sooner. And there's just so much simpler.
I had other questions, but they don't relate to my algo. But my testing was really positive. There was a lot of profit in it. But again, I don't think it's the same as when you do it live. But when you're altering a trade during the trade, like you sometimes go put your stop loss up to entry and things like that, do you get penalized, or is it? I don't really understand how that works, because I thought you set a trade and you let it run, and I don't know what happens when you alter the trade, the take profit or the stop loss in the middle of the trade.
So here's the way that works. If you're going to alter the trade, you do it the same way every time.
Right, but
it's going to be done by the same rules.
But does it? Do you get penalized for altering the trade? I mean, if I see that I'm in profit and I bring my profit level down to trigger a profit, do I make that money, or you know what I'm
Well, you got to have the way the answer to that is if you're going to bring your profit level down, if you're going to move your take profit lower and take profit sooner, you got to have a reason for that. That's specific. It's got to be this indicator did that, or what I mean?
No, I know there needs to be a reason for it, but would that put me in, would I get a payout on that if I bring it down?
One way to know is you test it.
Okay.
So, and it's got to be the same thing every time.
I'm going to do the same. I'm not going to be doing that on my algo right now, but yeah.
No, I wouldn't do that at all. So what I would do with that, again, this comes down to just take your loss. Test something that trades the same way every time.
Exactly.
Right. And because there's going to be a slight decrease. Usually there's going to be a slight decrease in profit from live trading than there is in back testing. And that's for a number of reasons. There's psychological reasons. There's technical reasons why that's the case. But that shouldn't be too different. It shouldn't, your expectancy shouldn't change that much between back testing, but that's if you're testing properly.
Yep.
Right.
Yes. About it.
And the testing, because it seems to me you're still kind of waffling on like what your different rules are for entries. And you got SMIs sitting there that are not being used, or maybe they're kind of being used. So you can't have any, it's got to be very robotic. Right. You got to have the same exact reasons for entering and the same exact reasons for exiting. It's going to be the same thing every single time. And if you take a loss, you take a loss.
Yeah.
So, because what you're doing here is you're putting the market through a filter, and the filter needs to be the same thing every time. And there's a lot of reasons for that. But one of the primary reasons, besides the real reason, of course, is so you know what your results are, right?
Yeah.
And the real reason is so you have a consistent model. That's the real reason. But a secondary reason that's almost just as important, if not more, is that if you understand your model, then you're going to understand, like, when you take 2 or 3 losses in a row and it's going to happen, you're just going to be like, hey, that's fine. Sometimes you take 2 or 3 losses, you know, and you're not going to quit, and you're not going to change, and you're not going to move your stops, and you're not going to move your profit. You're just going to take the loss and you're going to move on. And as it sounds to me, like in your live trading, you were tempted to do this and tempted to do that. Well, that's not what we do here.
No.
You know, that's how we lose money. That's how we don't get consistent results. And this isn't about that. This is about consistent results. Even if the results are not ideal, you want them to be consistent.
It's a lesson I need to learn over and over again, it seems. But it seemed like doing this simple algo with just the EMA ribbon is just too simple. I got to make it more complex. I got to incorporate the SMI somehow.
I don't know about that. I mean, I don't know that that's true. Are you saying? Are you describing to me your mental state, or are you saying that you think you actually need to do it?
Yeah, it just seems too simple to be true. Maybe that's more my mental state.
That's a mental state. Because people do these all the time and they're successful. People do EMA trades on 1 time frame and they're successful. You're doing it on 3. So that's a complete. That has nothing to do. That's all between your ears. So it's not on the chart.
So I'm going to begin. I mean, I like your Sunday preview. And I'm going to start just going with that and then map out some potential trades before they even happen.
Yeah. The previews are tricky lately with, here's the thing about Trump era trading is that, he'll do a lot of, he's shaking things up right now. So trading's tricky right now. What's good about the era is that you get a lot of volatility, so you get more opportunities, but you'll be in the middle of a trade and he'll say something and it just completely U-turns. What I've noticed about Trump era trading, though, is that let me go to a higher time frame. So on when you come to a major support or resistance, that's almost always when he makes a comment.
Okay.
You get what I'm saying, right? So it's not going to affect the Forex charts quite as much, I don't think, but certainly it's going to affect like Bitcoin and the stocks, especially. And I would almost always just track it when it comes when price on the charts here comes to like a support. Or on if it's Bitcoin, it's going to do with Bitcoin. If it's stocks, like for example, when price kind of dug down into the support right here, that's just so happened to be when Trump said, "Okay, we're going to change the tariffs a little bit," right? So it's those are the things you got to deal with. But you can almost always time the comments with supports and resistances, and that actually is true amongst like all of the administrations. That's not just a Trump thing, but it just seems more volatile with Trump. So, but you shouldn't be trading those anyway. Those supports. That's when you get to a support, you should be long in those. He kind of should be just augmenting the higher time frame trades. I mean, in theory, but theory's theory, right? So, but I think that if you kept it, one of the things that I'm kind of taken from this is that you're thinking that what you're doing is too simple, and no, it's not, because the triple EMA cross, you're doing a double cross, but any EMA cross like that, those are successful methods that are done on a daily basis by professionals, and they're done on 1 time frame. So you're literally doing a double EMA cross with multiple time frame analysis. This should be plenty successful for you.
Yeah.
You should not have a problem. Like,
Okay.
for example, here's a recent trade for you.
Mm-hmm.
Now, past this yellow line, we're into shorts, right?
Yep.
And then I'm on the far right here. So I'll do this one time frame at a time.
Yep.
So let's see. I'm on the wrong time frame. Okay, so when price goes below this 80 EMA, like that means that you're doing shorts, right? So really past this yellow line is when we're into the shorts.
Yep.
So then we can go, and I'll make this like a different color because we got a lot of lines in the chart. Make it I don't know, purple. And then past that purple line, you're into the shorts.
Yep.
So then your next condition is that your white has to go below the orange, and it really already is, right?
Mm-hmm. Mm-hmm.
So in this area right here, you're into shorts.
Yeah.
On the far left now. So let's go to the left. So this is your shorter, this is your trading time frame. This is the 3 hour, right?
Yep.
So if we're just going to use the EMA cross, then your entry is going to be right here.
Yeah.
Right. So let's go ahead and signify that. Right. And so we're going to do you're using ATR stops, right?
Yeah.
So we'll take our stop all the way up to the ATR.
No, I'm using the it's right there, the trailing stop loss.
Is it a trailing ATR stop?
Yeah.
Yeah. See, average true range trailing stops. That's an ATR.
Yeah.
So it's just it's just dynamic, right?
Yeah.
So you're going to do a 2-to-1.
Yeah.
So here's your 2-to-1 right there.
Yeah.
Right there. Right.
Yeah. Yeah.
Well, that's a win, isn't it?
Yeah. Yeah.
See?
Yeah.
So there's nothing wrong with your method.
No.
And I see zero reason to say that it's too simple.
Yeah. Okay. That's good. Actually,
Yeah,
that's a relief.
Yeah, no, it's a great method. I mean, it's you're doing some good stuff here. The only thing you're doing wrong, I don't think has to do with your method. It just has to do with your discipline. So here's another one right here. You got an entry right here.
Yeah.
Short. And your ATR stop is up here.
Mm-hmm.
So you're at a 2-to-1 already right here.
Yeah, right.
And that's a win, isn't it?
Yeah.
So it's a fast win.
Yep.
And then you've got right here another one.
Mm-hmm.
You're going to go short here. Actually, right here.
Yeah.
So you got to cross here. So your next candle, this is a nice entry on that.
Yep.
And then your ATR is up here. So you'd be in this trade at the time. Like, you'd be in it. Actually, at the time, I can't tell if we'd actually have to do a replay on this. Let's go back a little bit. Because your ATR at the time might have been lower.
Oh, right. And sometimes I wait until it goes into a bull or bear mode.
That's smart, though. Yeah, because right now it's in bull mode. So you have to wait for the for both conditions to line up. So you got your cross. Now you got your bear mode.
Yeah.
So then you're gonna go. You have your 2-to-1 right there. I think you might still be in this trade. I don't know that it's done yet.
Yeah.
Yeah. See, you would still be in the trade, but you've been in a profit. You almost win this trade.
Yeah.
So I would really simplify. What I would do is I wouldn't worry about EMAs. I mean, forgive me. Yeah. Definitely worry about EMAs. I would not. I'd ignore the SMIs.
Yeah.
Don't even put them on the chart. I'd delete them.
Yeah.
And then I would. This is one thing that almost always happens in these sessions, is that I'm going to give you. It's predictable. It's not almost predictable. It's predictable. Yeah. The couple of things that always happen is one, people have too many indicators and they want to make it more complex than it has to be.
Right.
That's super common. And I'm even myself guilty of it. The second thing is, oh, wow, we're already past the hour. The second thing here is that we call it, what was I going to say here? The second thing is that people don't have discipline. So, you got it. You just really, especially somebody like yourself, you're a professional. You don't have a lot of time. You personally are my target client, except the only difference between you and my target client is my target client already trades.
Yeah. Yeah.
Right. So, but you're, I mean, you and I have talked like everything about your demographic is my target client. I want somebody who is a professional, who is busy, who, this and that and the other. Now I can take anybody and I want to develop other people into being that target client. Right. So it's okay. Well, I don't care who you are and I don't care what your level is. I want you. But in this case, somebody who's only got a few hours a week, it's a beautiful thing, because what you can do is you can set an alarm for these EMAs. Right. Even if you're going about your day,
EMA cross,
you can set the EMA cross alarm.
Yep.
And when that cross happens,
then you
enter your trade. And you might have to wait. You might have to kind of watch every couple hours to make sure, let the candle close, set an alarm for 3 hours later, let that candle close. And then you've got your ATR back in bear mode. And then that's it, man. Just, I would stick with this where, 80 EMA is great. These two EMAs, I would change them. I would change them to 8 and 15.
8 and 15. Yeah.
And then here, I don't know what this blue EMA is.
That's the 80, but I don't need that. It shouldn't.
I don't think you need it.
No, I don't.
So let's get rid of it.
Yeah.
And then I would take these SMIs off.
Yep.
So let's go ahead and do that. Trash can. Okay.
Yep.
You got the SMIs off. And then at that point, you got everything else you need.
Yep.
And I would just do I would keep these EMAs, the 12 and 25s.
On the which chart? On all?
On the 3 hour.
On the 3 hour, and do the other EMA on the middle chart.
The middle would be the 8 and the
that makes sense.
8 and 15.
Wow.
Because look, you could change this. You can change this to 8 and 15 and test it. It might be better, but the only way you're going to know it is if you test it.
Yeah.
Because the higher time frame the EMA, the more solid. You're going to get a lot more false signals and things like that. I would keep this at 12 and 25.
Yeah.
Maybe even test elsewhere, but the 12 and 25 seem to be a pretty good sweet spot for you.
Yep. It seems like it, but perhaps try the 8 and 15 on the middle time frame.
From what I saw, I'd almost guarantee you that's going to be better.
Yeah. Well,
you should be able to knock out a back test pretty quick on that.
Yeah.
If you're just doing a few hours a week, you should be able to have that done pretty quick.
Oh yeah.
It's a lot. It's 200 back tests, but it's a lot simpler than what you were doing before.
No kidding. And so anyway, I'm feeling quite relieved now. This is because that's what I needed, is simplification and being able to have time to figure out how to do the trades. I think that's great.
Yeah, no, it's I definitely would. I would start over. It's okay. This is why we do this, right?
Yep. Oh no, I'm in no rush. But I'm committed to getting there.
Well, what I would do is I would have some kind of in your office prominently displayed, some kind of a note that says, stick to the algo.
Yeah, no kidding. I think you're right.
Just stick to it.
It's okay.
And it's gonna take you away from the screen, which is what you want.
Yeah. One place where OCD might be appropriate.
Mm-hmm. Yeah, no, just stick to the algo, stick to the plan, because again, the biggest reason is that you want a predictable result.
Yeah.
It's going to be key for the trading itself, but it's also going to be key for your trading psychology. You want that consistent result.
Yep. And then I can slowly add by testing the same thing on another pair.
Mm-hmm.
Yeah. Okay.
Yep.
Cool.
Then you just test, and then that way, once you've done that this is what's key. You test it on one pair, you test it on two pairs, and I would make sure that those pairs are kind of separated by different. Like I would do maybe EUR USD, then maybe GB or USD JPY, and then I flip it over to another, either the beast, maybe GBP JPY, or I try to make it so you're not doing too many USD pairs, not too many JPY pairs. And then if you got 3 pairs running, you're at that point with 3 pairs, you start to kind of get a lot of overlap in the market. So maybe even 2 pairs might be better. So you could do like EUR USD and then maybe like GBP JPY. And then you have 2 separate groups of currencies that don't have anything to do with each other. And then, right. And because otherwise the USD moves are going to be maybe good for you on one and bad for you on the other.
Right.
So I would do like maybe the euro dollar. It's a little less scammy than the cable. The pound dollar is a little more scammy in my opinion. So I would do like the euro dollar and then maybe like the beast, GBP JPY, or even AUD JPY, but I do the beast because of the volatility. GBP JPY, and then I'd run those if they're profitable. Back test them, forward test them, run them, and then what you have now is a profit center, and you're not just playing around.
That's excellent. That's a great plan.
So let's do this, because I know you and I've done this about 4 or 5 times. And we usually end up with something that looks like it's going to work. And then when we come back, I find that you've done something different.
Something's shifted. Like the last time, the thing that shifted is I realized I need to go to a swing trade method.
Okay. So that's good though. You're refining it, but I think you and I talked about that before, because I know what your schedule is like. So this is one thing, and I'm not aiming this directly at you. This is going to be to any of my clients. What I'm about to say, the following sentence, I'm aiming this at every single one of my clients. Take the coaching.
Oh God. No kidding.
Take the coaching. This is for everybody. Like I said, I'm not aiming this directly at you, but one of the problems I've got, and this is any coach, and I even have to like watch because I have coaches. You know what I mean? And one of the things that I have one coach right now. I have 2 coaches actually. And so one of the things my coaches like is that I take the coaching. Because I know that the area that I have them coaching me, they're the expert. Why would I do anything different for the moment? Now, eventually I might go and do, I might let's just say I was like successful at what I was doing. Then I might kind of do a change here, do a change there. But until I'm successful, why would I do anything besides what the coach said? So what I'm telling you to do is take this method unchanged and test it all the way through with the same exact risk to reward ratio. And then live test it. And then run it if it's profitable. And then rinse and repeat and do it with like whatever 2 pairs you like with no overlap in the market. So like I said, either the euro dollar versus maybe the beast. And if that's profitable and you're running, now you got a profit center. And what you can do now is you can go back and start optimizing and tweaking. That's what I really, really would coach you to do.
That's exactly what I'm going to do. And next time I report back, it'll be strictly following the algos. That's great.
Strictly like a robot. Like a robot, like no deviation whatsoever. Take a loss. So what?
I got.
You got to take losses.
I think I got freaked out going into live trading, but at least I know how to do it now. I know how to place a trade. That's the other thing. Just learning how to place a trade even is a new learning curve. Was a new learning curve for me as a beginner, right?
No, it's good. That's and that's really good that you kind of have the pieces of the puzzle down. But now that you have them down, go ahead and just robot. It doesn't, and this is going to apply when you trade in real life. Like you're just going to take a loss, and this is what there's a specific bias, and I talk about it in the trading psychology videos I do. And I even did a new trading psychology video on YouTube. And loss aversion seems to be one of the strongest biases. And it makes people not trade like a robot. And you just got to trade like a robot. It's fine. Take a loss. It's going to happen. And the higher your risk to reward ratio, the more losses you're going to take. And the biggest problem is that people take like 4 or 5 losses in a row and they stop. Because think about that. You're just getting whipped. You're getting conditioned like Pavlov's dog, and you just lost 3 or 4 in a row. You're like, this isn't working. I got something wrong. No, it's not. It's fine. I mean, chances are, if you've tested it and if you have consistent results, at some point in time, you're going to lose a few in a row. and this is where the trading psychology kicks in. This is where the testing kicks in,
Mm-hmm.
and you can back off. You can reduce your exposure, but to kind of, let's say you lose 3 in a row, right?
Mm-hmm.
And you find that you're doubting your methodology. Reduce your exposure down to like 10% and trade for a week or two that way, and you'll find that okay, everything's fine.
Yeah. Okay. That's really fantastic. I really appreciate it.
Yeah, no problem. We'll see you next time, and I hope it's soon, because I think you really have something here. I like what you've done.
Yeah, I think it'll be soon.
Okay.
I'm back in the saddle. I was sort of thrown off kilter with the whole live trading thing. It seemed, because it is very different, and got to plan.
Well, think about that for a minute though, because the not doing the right thing almost caused you to fail.
Yeah.
So let's think about that. Not doing the right thing, not following the coaching almost caused you to fail. You had a bad experience live trading, but you weren't following the Algo Factory formula.
No. I deviated. Yeah, for sure.
Deviated. Yeah, this is not, I mean,
I'll reduce my risk by adjusting this or adjusting that.
Yeah, don't do that. That's like, you literally pay me every month. Like, what do you pay me for? Just just do the Algo Factory thing, like follow the directions. And then once you're successful and once you have like algos running and making you money,
success would be just increasing your account, slowly growing the account.
Yeah, growing it at all in a consistent way. That is, it's got to be. It doesn't have to be a fast growth, but it's got to be growth that's worth your time.
Yep.
If you want 15% a year, put your money in the SP 500. You know what I mean? Like that's what is that? Less than 2% a month. Yeah. And that's great. There's nothing. I mean, that's beautiful, man. If you can get 50% a year, you're great. People love 50% a year, but as a Forex trader, you want like double that if you can.
Yeah.
You know what I mean? 30% a year is beautiful. I mean, who gets that? You can get that.
Yep.
That's 30% a year is like 2.5% a month.
And that can go,
is that right?
Exponentially eventually. Yeah.
It can. Yep.
Cool. Thanks for the encouragement. I'm back in the saddle.
Yeah, you need it. Okay, let me tell you something else. And this goes to any of the Algo Factory members. If you're at a point where you're getting discouraged, I need to know about it.
Yeah.
Because this is the kind of thing that, this is why I do these live. And just so anybody who's watching, like what we have is we have a deal where you come in, you pay $100 a month now because the price is at $100 a month. That's $99.98. And what you do is you have our online classes. You need to go through those to learn what we do. Right.
Yeah.
And then you have 4 days a week, Tuesday through Friday of live trading. And we do a lot of geopolitical stuff, and it's all, V the Guerilla comes in, and he had to go because we're well past our normal time.
Yeah.
But V the Gorilla's got his intel is amazing. Like I don't know anybody that's got intel like V the Gorilla.
Well, that's partly the reason I want to stay in too.
Yeah, no, a lot of people. There's people who come to Algo Factory. They don't even care to trade. They just want to hear what V has to say. And he comes in. He's here almost every day. And he took a month or two off there. He was still here and there. He's kind of sprinkled in like once a week, whatever. But he's usually here almost every day. Yeah. And he gets information, and the information comes when it comes. What I mean by that is, sometimes it's like 4 times a month. Sometimes it's once or twice a month. But besides that, he's always got good information. Like when I'm talking to him, like even if it's not some special, hey, big alert information, he's always kind of just has his finger on the market because he's always doing deals. He's always talking to the billionaires who are buying and selling gold and Bitcoin. So that guy just knows what the hell is going on. And we got a number of people who aren't even trading. They're just with us for that.
Well, it's also, I've been finding it's useful for the crossover between swing trading and investing, like listening to that and the information from V, but also from other members on the Telegram channel. You can get good. There's a transition from swing trading to investing, right? And
that's right.
You can start playing with your money there too by getting a lot of good feedback, a lot of good info.
Oh yeah, absolutely. I mean, it's not, we don't really give any advice, but
No.
what you're able to do is you can take the information that we give and formulate your own hypothesis, your own
Yeah.
thesis, and, do your own research and all that.
Yeah. Yeah.
So it's like you said, it's really valuable. And I'm glad that you came to me, because this is I don't like using a little bit of a come to Jesus for you, but we gotta stick with the plan, my man. You'll be good.
Yeah. No, that's great. I look forward to reporting on my results.
Yeah, awesome. And feel free to, as you're kind of testing,
Yeah.
feel free to kind of send me some notes on Telegram. Say, hey, I did, 10 tests this week and I got this. And even if I'm not responding that much to that, at least I know you're having progress.
Okay. Yep.
And by the way, last thing I'll say is that these like live things that we do, we do, we give you 2 one-on-ones that are private with part of with your membership. But if you're with us at Algo Factory, you can do as many of these live as you want. This one-on-one attention that you get from me, this is unlimited for any member.
Yeah, I'm surprised more people aren't climbing on board and doing it.
I can tell you why. It's that the last year or so, like we started in 2023 at the bottom of the bear, so for the crypto market bear, and we started out with crypto years ago, me and V. So we were a bit crypto centric. We have a lot of people left over from that, and so and that's a lot of my content is crypto content. So people are basically out there trading crypto and they're buying meme coins and they think they're going to get rich on it. And so they're not really wanting to put forth the effort to do the trading. They think they're going to get rich. And some of them have gotten rich just holding crypto going back to 2023. So they feel like they know what they're doing. And to a certain extent they do. But then you have some guys in here and gals that you'll notice are actually trading. So that's kind of your next group up, where they're actually trading, but they're not necessarily doing the right thing. They're not building their algo. They're not showing the discipline. They're not following the method. And then you have the next tier up. That's individuals such as yourself who are following the method, and then they just need a little bit of tweaking here and there on the coaching. So I would like everybody to be at that primary tier. I want to be so busy that I got to raise my price again.
Yeah.
That's where I want to be. So anytime you want to do this thing free, you're kind of in a way, it's really good for people to see what you're going through.
Yeah. No, it's good. I'm glad I can share it too.
So awesome.
Okay.
Well, thank you for doing this, and we'll do it again. And like I say, go ahead and if you could once a week just touch base with me to kind of let me know how you're doing, and I can do what I can to pull you on a track.
Okay, I'll give you an update. Definitely keep giving updates.
Awesome. Hey, thank you everybody for watching, and we'll catch you Tuesday morning, 8:30 a.m. sharp. And think free, you'll probably be back to this a little bit sooner then, yeah?
Yeah. I want to get going on this now. It's good.
Okay. Well, maybe we'll do it next month,
And encouragement. That's what's great too.
Yeah. I mean, I'm not always the nicest guy, but I want to help. You know what I mean?
Yeah. Fantastic.
All right. Awesome. Thank you all.
Yep. Thank you. Have a good day.
See it.